Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. And I am here to tell you one thing and one thing only. Do not fall in love with the upside. I am telling you, traders, I have pointed it out to you day after day. I do not care what they think on TV land. I am telling you, do not fall in love with the upside. I have some charts behind me. I think I can show you a technical reason why you should be looking for the downside in the S&P market. You know, for you technicians out there, if you look at two different charts, NASDAQ and S&P, the NASDAQ looks slightly bullish, S&P looks slightly bearish, but all the indicators are absolutely bearish in the S&P. And I'm going to take you to some charts right now so you can see why. These charts are for trading on 03/26/08. That's March 26th, Wednesday. Let's go look at the charts, traders. I'll be right back to you. Okay, traders, the first chart I'm about to show you is the S&P June daily bar, the Emini chart. Take a look at this, traders. We have been inside of this channel for quite some time, as you can see here with the red lines. The interesting thing I find with this chart is the parabolic SAR stop and reverse system that is overlaid on this chart. I've used this for you once before. Right here you have the parabolics represented by these dots. When the market is bearish, the dots are above. When the market is bullish, the dots are below. Interestingly, you had 4 dots right here and then a big breakdown. Then the market rallies and we had 4 dots right here and then a big breakdown. Then the market rallies and we had 4 dots right here. Then the market didn't do much. It kind of went left and it went right and it didn't go anywhere. Went up, hit this trend line, and what do we have now? Look at the dots right there. I tell you, traders, that's one of the indicators that will likely mean we are going to start heading right back down in the S&P. We are below our proprietary averages that we like to use here at the OMNI Trading Academy. So that's number one. Let's look at a few more charts here. Okay, traders, the next chart you're about to see is, of course, still the S&P daily bar with a Williams %R indicator on it. And if you look here, it is definitely in the overbought area and is hooking back down already. And if you look across, you can see it is absolutely in the area where that will happen just about every time. Indicator number 2, telling us look for some downside in the S&P. Do not fall in love with the upside. Let's look further. Okay, traders, chart number 3 are more indicators that I like to look at when I'm deciding which way a market may go. First one is the RSI, or Relative Strength Index, already beginning to hook back down towards the downside. Another indicator pointing towards not falling in love with the upside. Then you have the WADX, the Average Directional Movement Indicator. When the green is pointing down and the red starts pointing up, you have a bearish indication. Opposite would be when the green is pointing up and the red is pointing down. That's a bullish indication. Right now we have a bearish indication. Another indicator pointing towards the downside. Now we have a slow stochastic beneath that. The slow stochastics are way up into the overbought area now and should absolutely start to turn down. You got a little hook right there. Another indicator on the S&P market telling us not to fall in love with the upside. Let's look at another chart here, traders. All right, traders, the next chart you are looking at is still the S&P daily and another couple of indicators. I got 3 of them here to show you. This is the DMI, or Directional Movement Indicator. It is like the ADX. It looks like the ADX, but it is smoother and it gives less signals. When it does give signals, they're usually very valid. And we have what looks like happened here and here, happening here right now. And that is another bearish indication. Green pointing down, red beginning to point up. Then below that, you got the commodity channel index. Look how high that went and then began to hook down. See the hook right there I just wrote over? It is hooking down. Another indication that we should be heading towards the downside. Then, of course, open interest stopped going up and went sideways to slightly lower, and volume tapered off. Traders, when volume and open interest decrease in an up move, it is generally a false move and an indication that the market wants to go lower. That is enough indicators for me. And on top of it, we've just had not one, but two, count them traders, 1-2 days up in a bear market. That almost always gives us a turnaround signal. That is enough for me to tell you not to fall in love with this upside. Take a look at your own homework, traders. Pull up your S&P charts, pull out your indicators. If you don't know how to use them, come down to the OMNI Trading Academy at www.livewithoscar.com, and we will tell you how to use these indicators, what charts to apply them to, what markets they work with, what markets they fail to work with, and how you can use them to enhance your trading decisions. Okay, traders, so you've seen the charts, you've heard the warning, and now I want to show you what usually happens with 2 days up in a bear market, and it usually looks like this. If a market is trending down and then suddenly has an up day and another up day, that is generally a sell signal. That's what I'm expecting to get out of this market for Wednesday. Let's see what happens, traders. I know I'm one of the few out there right now that are calling for this, but I believe in my analysis, I believe in technical indicators, and I believe in the 2-day rule. That right there is the 2-day rule. And I'll tell you right now, I'm going to trade it that way, and hopefully you, OMNIacs, will trade it that way with me, because tomorrow for Wednesday, we got a red OMNI, baby. It is red. The Emini S&P, the ESM8, OMNI says to, what's that word, everybody?
Sell.
Sell. OMNI says sell the S&P as it approaches the mid to high 1350s. If it gets up there, sell some out. I will say this, when I did my analysis, my stops are tighter than usual. They came in. OMNIacs who are out there who know me and know my style well enough, what does that mean when our stops are getting tighter? I think you all know what that means. Make sure you come to the chat rooms tomorrow so we can see if this actually works. I do think it will. Let's see what's going on. All right, so OMNI says to sell the S&P in the mid to high 1350s. OMNI's profit objective on this trade is the mid to low 1320s or be out by the close. If I am right, we should begin to fail, and then the sellers will come out of the woodwork, traders. You know, of course, I don't have a crystal ball. I don't know if I'm going to be right for sure, but I'll tell you this much. I sure do think it's going to be right. You've seen me make calls like this before when markets are going up and they should be going down, and we've been very consistent with our calls. So do your homework on this trade and see if you feel the same way. If you find that the market's bearish, take the trade. If you think it's bullish, stay away from my recommendation. Traders only use my recommendations as an indicator to help you decide if what you've done for homework makes sense. If you've come up with a sale and I've come up with a sale, well then get short. If there's some difference between my opinion and yours, stick to your guns and take your trade and do it your way. But I tell you what, traders, I've been doing this a long time. I'm looking for a short tomorrow. We're also looking at the upside for gold and the upside for wheat. We have OMNI recommendations on our site right now. We put them out a few hours ago. Go to the site. Again, it's www.livewithoscar.com. Take out a membership, traders. There are free memberships. There are memberships where you can get certain things at our site, like the gold membership. You can have a premium membership where you're in the premium room where I have a camera on me and a microphone live at all times. And we are there to help you get through these rough and tumble markets. But come on down and join the ever-growing army of OMNIacs, because we can help you out there. Traders, don't try this alone. Don't trade alone. You can't imagine how many traders have told me that since they have found our crowd to hang out with, they've gotten much, much better with their trading. If you have a lot of astute traders around you to bounce your opinions off of, I will tell you for sure, it will help you make smarter decisions. If there are lots of people pointing in one direction and they're all good at what they do, the likelihood is if you come up with something in that same direction, you're in good company. So come on down to our Trading Academy and make sure you join us in the rooms. All right, I guess there's not much else I want to tell you except for, do I have to yell at you again? Don't fall in love with the upside here, traders. I know, I'll say it again, I'm one of the few left out there that are calling for a downside right now. I can't imagine how anybody thinks that the economy is fixed and that everything's better now. I'm reading articles in the paper almost every day about how there were riots in countries all over the world because the food's getting so expensive they can't afford it. How is that going to make stock markets go up? Well, I don't know, but let's see what we're going to get. The analysis says markets will go down. Let's see what we get out of that. All right, traders, we have a lot of videos for you now. We have
289, 290.
Really, that many?
That many.
Dig it. We have 290 videos. I didn't even know I did that many. We have 290 videos at our YouTube spot. A lot like this video that we're doing now, where you can learn from the techniques that we put up on the board, traders. Go to our YouTube spot. Subscribe to our videos when you get there and find out what this is all about. You can use those videos to learn from and catch up to where we are now. Our YouTube spot is www.youtube.com/futures analysts. As always, please shoot me out your emails to oscar@futuresanalysts.com. And you can call us day or night. As you know, one of these guys in this room, the girl that works with us, Obi, somebody's going to answer the phone almost any time you call, 24/7. So give us a call at 702-629-4755. All right, traders, after that rough and tumble week last week coming into the holiday, everything did shape up the way we expected. We did some videos about it. We talked about it in last night's video. And the markets have all turned around and started to go in the opposite direction or in the right direction, the direction that they were going in before the holiday week. The only one that didn't turn was the stock indices. I think they're getting their turn now. They're going to go right back down where they started from. Let's see what we get. Traders, on this trade, place your stop. Always place your stops first, but you are going to need a wide stop on any of these two trades for sure. Gold and wheat, you need a wide stop. The S&P, be a little careful. You don't need the biggest stop in the world for tomorrow. If we're right, we're going to be absolutely right. If we're wrong, you don't want to risk too much on this one. So put a stop in a sensible place, a place you can live with. But I'm not talking a $2 stop. I never trade with those traders. Put a stop in, but you don't need a massive one for tomorrow. If we're right, we're going to be right like that. All right, traders. Last but not least, keep your emotions out of trading. And one of the best things I can do to help you with keeping your emotions out of trading, barring having you come to my site every day and be in my chat rooms, is to tell you to say this over and over to yourselves every day. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.